afternoon, everyone, and welcome to Stock Market Today. My name is Ken Shreve. I'm a senior markets writer for Investors Business Daily. Not such a great day for the market, but we've been looking at a market that's been under some distribution for a while now. Big loss for the Nasdaq Composite as selling. Intensified in the afternoon. Before we talk about today's market action, let me throw things over to Ed Carson, who have found three stocks to watch for today.
Yeah, these are three stocks that are doing reasonably well: Nutanix, Urban Outfitters, and 3M.
Okay, very good. Well, let me share my screen here and get going by taking a look first at the uh, Nasdaq Composite, which was down, boy, I think the final loss was 2.8%. Looks like we're going to get slightly higher volume again. So this is going to be another distribution day. Ed, if you had asked me before the day if the Nasdaq was going to come down close and test its 200-day line, I wouldn't have thought that was in the cards, but it was a pretty rough day.
Yeah, it is pretty ugly. Now, undercut the January low that we had, a couple months ago. Really, it's to the lowest level since below the gap up of the November 6th post-election day. So haven't fully round tripped the election gains because we're not at the November 5th close, but we've essentially done that. So if we go below the 200-day line, we'll essentially have round tripped all of the election gains. A lot of damage. And again, it's so damaging. It's also because we were so close to really moving. This wasn't us being in the chop and then slowly coming off. We were right there at record highs, and then really a painful loss over the past week and a half. Obviously, Nvidia was a big factor.
Yeah,
And
let me pull up a chart of Nvidia because we had Nvidia earnings late Wednesday, and the numbers were pretty solid again. The outlook seemed pretty good, but boy, the selling in Nvidia relentless today.
Pretty relentless. And, for the second straight quarter, it sort of moves up briefly and then reverses lower. It briefly got above the 50-day line right at the open, but that was like for a minute. And then the selling started and it just kept mounting and it's through the 200-day line. So it's not that far from the lows after the whole DeepSeek stuff. I mean, we're not there yet, but, essentially, and this stock hasn't gone anywhere for 8 months, is what's happened here. This was really discouraging. A lot of AI hardware came in. So Nvidia, and the other big piece of news was probably Trump announcing, yes, some tariffs against Mexico and Canada coming in. And that was sort of known, but we're also going to see further China tariffs. And we're just going to see a wave of tariffs over the next several weeks. So there seems to be a lot of headwinds coming up.
Yeah, particularly these tariffs. A lot of people just not sure what tariffs are going to do regarding inflation, and just a lot of uncertainty. Let's take a look at the S&P 500. Hard to believe that even after a sharp pullback today, this index, as you mentioned earlier this morning, Ed, it was in new was at hit an all-time high less than 2 weeks ago, and right now only 4% off its all-time high. Today it was down 1.6%. Still has a ways to go to get to that 57.73 low right here, and still a pocket of air above its 200-day moving average. Let's take a look at the Dow Jones Industrial Average, and that was really selling fairly muted selling pressure here, only down about a 0.5%. Still struggling to retain that 50-day moving average. And then let's just take a look at the Russell 2000, which has been the weakest performing index. I think right now about 13% off its all-time high. So it's definitely in an intermediate term correction here.
Yeah, and just to say, the Dow got some benefit because there's 3M, which we'll talk about, and there's also some financials. At least intraday, we're acting well. There's a lot of financial sector stuff is doing well, which we'll get to also. But so that was something. But ultimately, it's the COMD, and so it got above the 50-day line. But this is sort of the strongest part of the market right at the very moment, and it's
Mhm.
not doing particularly well.
Well, financials were doing well for a good portion of the session. Let's take a look at that financial select sector spider ETF. That is XLF, and still battling pretty well here. Kind of a sluggish breakout recently over that 51.62 pivot. Really didn't make much progress, but it's still holding the 50-day line here.
Yeah, I mean, there was a lot of things that like insurers are doing well, some of the big banks are doing well, traditional payment stocks are doing well. Berkshire, which also owns a bunch of these financials, it's doing well. But it's not going anywhere in the last few weeks. So that's the thing. You could have put in cash, and not really been the same, in the last few weeks. So how, there's headwinds can still come in. I think these might be more resistant, but they're not necessarily going to lead, really power ahead. And then there's always the risk that, well, what if we go risk on? The more if they're particularly defensive, some of these stocks may start lagging. Well, it just
Yeah.
wasn't. This is an area of strength, financials, and there's a few other areas that did okay, for sure. But it's not going great. It's more like there's areas that are holding on, and then areas that are falling apart.
Here are the B shares of Berkshire Hathaway, still holding a recent breakout well after reporting earnings. We have been talking about the broad-based selling among market-leading growth stocks, and perhaps nowhere is that better seen than in the innovator IBD 50, which has really been hit hard over the past couple of weeks here.
And I think the only thing it's probably be even worse if you considered that some of the stocks that really sent that thing plunging initially, those are probably out of the IBD 50 now. So, but so there's a lot of these high growth leaders that are coming in. A few were sort of trying to hang on to their 50-day lines or their 200-day lines, and they're struggling. I mean, again, if the market bounces, some of these names might bounce off of support, but it's just, yeah, the leading stocks, the growth names, especially the speculative ones, are really in trouble.
Yeah, I would just remind people that follow the IBD 50 index of leading growth stocks is even though we're seeing a lot of sell signals among leading growth stocks, this index does do a good job of always capturing strength in the market. So we're going to definitely see a different makeup to this list in coming days and weeks. And once again, you're going to see stocks showing relative strength, holding up in the market. So even though you're seeing a lot of sell signals now, over the next few weeks, it's likely we'll see new companies coming into the IBD 50 that are showing relative strength. So even though it's been hurting now, still an index to keep an eye on for emerging market leadership. And also wanted to get your take real quickly on this relentless buying of bonds. You can see that 10-year Treasury yield went all the way up to 4.81%, and then just relentless bond buying. What is going on in the bond market? What is the bond? Is the bond market worried about tariffs? Is the bond market worried about stagflation? Is it worried about the economy? What's going on with all this bond buying?
Yeah, and this is on the long end. The short end, like especially the T bills, they're really not moving at all because they're not expecting the Fed to do anything.
Hmm.
But this has come down a lot. I think this is mostly about economic worries. There's some data that shows slowing growth, and maybe tariffs could be a factor on that. That could also be potentially boost inflation, at least one-off increases. But the Fed probably isn't going to be doing anything. With inflation being relatively high, there's only so much the Fed can do. So if you're worried about the economy, the Fed isn't going to be there to save you, so at least obviously if things fell apart, well, then inflation would probably also cool and the Fed would, but you need a lot more. And we will get the PC price index tomorrow morning. So that will be important. If we could see some cooling, then you might start feeling like the Fed might do something, down the road, at least earlier. But uh, yeah, this is not a positive sign. It's also probably reflecting the stock market weakening as well. So it's not
Yeah.
really great news.
I'm glad you mentioned the personal consumption expenditures index. That's going to be out tomorrow morning, 8:30 a.m. Eastern time, I believe. That's part of the personal income and spending report. I believe on a year-over-year basis, core PCE is expected to fall a little bit from the prior month, if I read that correctly. The most recent reading was core year-over-year prices up 2.8%. It is expected to come down to 2.6%. If that happens, we'll see how the market reacts. But what we know right now, this is a market that's under distribution. We've got leading growth stocks flashing sell signals left and right, and really a signal for those who haven't been raising cash. You should have been doing this for a little while, but just be careful out there because the market is very tough right now. There
And I would
was
just add on
one.
that, don't get excited by one positive open or even one strong day. We need to see real strength. It's like we have the follow through system. And the reason why that works is that you just want at least a few days that it's actually gaining momentum. It's sort of like when you get that car to turn over. It's not just that you actually get that wheels moving a little bit, and just a half-hour rally is nowhere near enough to get excited.
Yeah, it takes more than a two or three up days to really, start to establish an uptrend. Well, there was some good news today in an otherwise sea of red. Let's take a look at Nutanix. Had several, earnings winners in the beginning here. So NTNX, maybe not a name that people are familiar with in this enterprise software group, but this is a gap up that held pretty well today.
Yeah, I think they're sort of in the data management storage. They sort of compete against things like NetApp, which reported tonight. But yeah, this beat views and it guided higher. It just gapped up and it held that gain. And I think that that was a nice action. There's probably, there would have been an early entry, but it just gapped right into the traditional buy point. So that's fine. I think the only thing here is that, look, good numbers. If this were a good market, you feel better. Like a month ago, gap ups were working. But now, if the market is dragging down, what you're going to see is often stocks will gap up because they get that one day of news. But if the market fades, this may fade because it's like, not that it's bad, not that it doesn't deserve to do well, but that's just an issue. So I think that would be a concern with earnings moves. But nice move here. It went through a long correction, but it's back at highs.
You see this sharp pullback when Nutanix, came corrected pretty sharply over the summer. This is a good example of how a stock resets a base count. So there was a sharp pullback here where the stock hit this low. So this breakout here will be from an early stage base because there was just a lot of selling, shook out a lot of sellers here that sort of wiped the slate clean and has paved the way for some nice price strength here. So Nutanix definitely a name worth watching. We got a bunch of retail reports next week. But Urban Outfitters also made a nice move today. We'll start with the daily chart here. Urban Outfitters, another strong quarter. It looks like.
Yeah, really strong earnings. I think we had accelerating growth for a second straight quarter, accelerating revenue growth as well from the prior quarter. So yeah, this one's still going right. The growth is supposed to slow a little bit, but still be pretty strong for the next couple of years. Now that we're for fiscal 2026 and 2027, nice bounce here. Got above the 50-day line. You could probably call a downward sloping trend line. Maybe you could say that 58.35 would be another place that it sort of got up to and then faded. So you could use that trend line, or you could use maybe today's high as an entry. This was a nice behavior because again, it's just sort of basing after a big run up from the prior earnings. So this is all very strong. I mean, the relative strength line isn't a new high, but over the last few months, it's definitely trended higher. I think again, like the biggest concern is that, well, can it hold it or will it fall tomorrow? Like if the market continues to weaken, will this just sort of fade away like we've seen with a few other earnings reports recently?
And like they always say, a weak market eventually takes everything down with it. So,
Yes.
all right. Final stock is going to be an industrial here that is also looking pretty good in this market after a pretty decent earnings report. Let's take a look at 3M, tracked in the diversified operations group. What are you seeing here, Ed?
Yeah, well, it looks like the RS line hit a new high. It's not going to be a blue dot because this wasn't a base, but it's sort of forming a sort of shelf consolidation here. Bounced off the 50-day, 10-week line, which is basically at the top of that buy point. So it tested that yesterday. Today gets above the 21-day line, sort of breaks a trend line within there. So you could have done that. It's like a pretty scary market to be doing that. And the stock did fall off of highs, but this is sort of a defensive play and a turnaround. It had a turnaround nature because it sold off some stuff, and so there were some one-offs going on. But it may revert to more of a defensive nature going forward. It's hard to say, but nice action here. It was buyable. Again, if you do make any buys, you would probably want to do it in areas that are like the financials or in some industrials or spaces that showing strength and maybe use small positions. Uh, but again, this one going well. The fundamentals aren't the best. There is, again, a turnaround aspect to it, and it has gone
Hmm.
on a run. So those are just a couple of caveats. I think caveats are definitely in order in this kind of market. Uh, So, but definitely nice action here.
Good volume at the breakout. You can see down at the bottom here. What I particularly like about this setup is that the pullback right in this area here. Look at how volume just kind of drifted lower and quieted down, and now new buyers, heavy volume gains as the stock finds support. So this looks to be a pretty good setup in this market. I am going to stop my share here, and Ed, always appreciate your comments as usual.
Thank you very much.
All right, folks, that'll do it for today. Tough day for the market. We'll see what this personal consumption expenditures index inside the personal income and spending report, what that looks like in the morning. Tough market out there. Be careful. You should be raising cash here, getting out of the market's way, but we'll see how the market reacts to the latest inflation report Friday morning. Until then, hope you can join us on IBD Live tomorrow morning. If you haven't checked it out yet, you can go to investors.com, IBD Live for more information. Other than that, Ali will be back. Actually, no, Ali is not going to be back tomorrow. It's going to be Justin and Mike Webster to conclude the week. So we'll see you back here tomorrow. Thanks, everybody.